lows and the levels and all the other things volatility related. KG, should we start with what we were talking about this morning? VIX up, stocks up, kind of holding on to that regime here.
Yeah, it's a pretty interesting development that we're seeing. Now, we rarely kind of see this type of correlation. It usually 80% of the time we have the VIX down, S&P 500 is up, or vice versa. So today we are seeing that positive correlation. And so just keep that on your radar here in the near term. What that could just signify is that we have some more event risk taking place in the market. I thought we probably would have saw the VIX actually slide to the downside a little bit after having the payroll numbers adjusted, as well as also having the FOMC minutes, but that does not seem to be the case. We do have initial claims coming out tomorrow too, so maybe that's another reason why we're seeing a little bit more hedging activity taking place. And that's actually something that we did see today, a little bit more put activity happening in the market. Still, call side is very heavy, but the puts are starting to gain a little bit more steam. But the options volume overall is actually really healthy right now, Oliver.
Okay, so it's not like there's rabid speculative call buying driving up the VIX like FOMO style stuff. This is more just kind of balancing out and possibly some downside hedging that had been a little bit absent prior.
Yeah, I think you're seeing a lot of intraday churn when it comes to the call buying right now. And so that's usually happening earlier in the morning, and then we're kind of sliding down. So I think the biggest risk going into the close here today is the unwinding of a lot of those speculative call buyers. And that could also kind of release a lot of the pressure for these dealers to really unwind some of their hedges. Now, we've been in a pretty compressed market for today, holding the top side and bottom side levels here. So I think that's actually one good thing to say. I mean, we kind of talked about the fact that we had a nice little run up over the last couple of trading sessions, 8 of the last 9 trading sessions. Even yesterday was actually pretty good. And now we're trying to just make sure that we have that price discovery really taking place. So that inching up of the VIX is being more put side driven in my, from what I see, rather than call side speculative flows hitting the market just in an aggressive manner. It's really more balanced out for today.
I like the chart that we were just looking at there. If we pull it up one more time, just because, and in case folks didn't notice, those little red dashes you've got, they're kind of showing other instances. VIX up, stocks up, that did in the last year, year to date rather, kind of precede some of these moments of weakness. We got a little bit of that too in a few of our big moments over the last 5 years. For a while, it was VIX up, stocks up before the COVID thing. So it is something I like to keep an eye on. Good eyes there. It can also just happen. Like you said, it happens like 20% of the time as part of just normal activity, but it also, if it happens at length, it can kind of wake you up to what's going on. It seems like largely the stuff we talked about yesterday as far as the gamma exposure and the dealer exposure, most of that's still consistent today?
It is. And if we actually look at the open interest toss chart here, you can actually see the fact that we are still trading in a channel. Pretty much compression right now. And so the levels all remain the same. Nothing really is going to be monumentally different. Maybe the put flows that we are seeing today, if they are going to be a little bit more sticky, maybe we see another move to the upside here when it comes to that negative gamma level, which is sitting at 5,500 right now. Maybe that inches up to 5,550. That could be the case. We won't know until tomorrow morning. One thing I will kind of note, and I didn't draw it on the chart, but just to kind of keep it in mind, we do potentially have a head and shoulders pattern that is kind of taking place right now, which would be ultimately bearish. So we kind of want to get out of this channel to the upside, at least in the next trading session, to break up, because the stalling out will actually give bears a little bit more confidence that we can break it down. It's that upper channel line, that bottom channel line that I have on there that's basically going from yesterday till today. We've been testing that lower area, hitting that 5,600 level. Buyers have been stepping in. Today we kind of went below that 5,600 level, but we still had dealers kind of compressing that market, pushing us back to the upside. We had some favorable data as well, but a break below 55.90 just on an intraday basis, I think would be a little bit more of a cause for concern for those that are looking at these charts and trying to pick out really quick scalps or even 1 day or 2 day swing trades.
Okay. All right. So we're seeming pretty comfortable, I guess, here, and without any real kind of impetus, any force from the outside. I guess we just kind of assume, like Danny put it at the top of the show, don't short a dull market. I kind of look at it from the objects in motion stay in motion. But of course, we've got a few things in the next 48 hours that could be external forces.
Yeah, true. One thing, though, if we continue to fail the 56.25, 56.30 level, if we can continue to fail that, because that's really the last gap that we have to fill, then you start to question, okay, are we going to see a minor pullback in this market or not? Once again, I mean, we still have some economic data that could really push us to the upside. We also have NVIDIA next week that we're kind of anticipating. Maybe we have a bull run up until that event. But that's just something just to keep on your radar. Now, on an intraday basis, these are the levels: 5630 upper end positive gamma level. So you see dealers trying to fade that. And then the 5600 level is where you want to see dealers really buying in. We actually had a time there where it did get a little bit ugly, but we were able to kind of reverse that trend. And now we're kind of trading in this range. The balance area for the day is 5608. That would be for dealers to be, for the most part, net neutral. It seems like just based on the flows right now, that's kind of the area that we want to be in, or even maybe retesting that 5600 level. That is something that is possible. I just don't really see, from a flow standpoint, this aggressive call buying to the upside to really squeeze these markets. It does appear once again to be a little bit more compressed and maybe just range bound going into the close here.
Okay. So today's volatility around the payrolls revision, basically, you could kind of look at that as a test of that upper level that we failed, essentially. So it seems like that's still keeping a lid on us into the close.
Yeah, well, that release was a hot mess. So I'm pretty sure that kind of messed a lot of people up when it came to the intraday trade.
Well, it tried to rally on it.
Yeah, we tried to, but it's a pretty big wall that's there if you're looking at it from an intraday base. I mean, we've been seeing flows as soon as the market opened up here today, so it wasn't really that surprising. What is a little bit more concerning is that when we hit those peaks, the aggressive selling into those peaks, you can see it earlier this morning, those red candles that we saw earlier this morning after touching it, and then once again when we tried to retest it, sitting at around 56.25, just the aggressiveness on the sell-offs, which leads me a little bit more concerned about the market just for today alone. We're holding in there, but it's a little bit more aggressive for a level, Oliver, that just wasn't as pronounced over the last couple of trading sessions as, say, the 5600 level.
Okay, so we're kind of like cementing to some degree that 5630 is resistance, but a few more tries, and then we'll really be able to say, like, all right, that's a hard wall. But right now, it's kind of looking like it's a pretty hard wall. All right, good stuff. Thank you, Kevin Green.